or because of the
I know.
Telegram? Yeah, okay.
Anyway, we're ready. Good morning. It's the 14th of June. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Morning, Steve.
Good morning on another glorious day from the
Yes,
UK.
lovely indeed. And England won their opening match of Euro 2020, so all good.
Yeah, first time in 10 efforts, I think.
Yeah, first 20 minutes were fantastic. It was rubbish after that, I thought.
Yeah, exactly the same. I think they sort of like they puffed themselves out a bit.
Yeah,
But that tends to happen in games, isn't it? If you sort of like you have a real sort of decent hot spell for 20, 25 minutes, doesn't matter who you are, the teams sort of seem to sort of like then, you know, I don't know, just sort of settle down a bit. The game settles down. Yeah, if
yeah,
you could keep that sort of intensity up for another sort of like 10, well, for the whole of the game, it would have been a great spectacle.
yeah, absolutely. Obviously, pretty distressing scenes on the Saturday when the Danish player Christian Eriksen collapsed on the pitch. That was, most distressing, and obviously, hope he's all right. He seems to be okay, according to the news, but
Yeah.
that didn't make pleasant watching, did it?
No, yeah, and I think the sort of BBC will learn a big lesson from that. I
I
know
think
the sort
they
of
get the feed from UEFA, don't they, directly? But they could have cut to the
yeah,
studio a bit quicker, I think, maybe.
yeah, definitely. Yeah, it wasn't nice to watch at all, and makes you realise that football isn't the be all and end all.
Mm, indeed.
Yeah, good luck to
Okay.
him.
Yes, indeed. So, right, on to what's going on with the news. So, the big news in the UK today is that Boris Johnson is expecting to announce a delay of as long as 4 weeks to the easing of most of the social distancing rules in UK. He was expected to end restrictions on June the 21st, but because of the increase in numbers, particularly of this Delta variant that's rife in the UK at the moment, we're going to be pushing that back a little bit. There may be some relaxation of the restrictions on things like weddings, because obviously people would have booked these in advance. And some major sporting events, which I think is probably quite fair and a nice compromise. But I think it's the right thing to do, and we'll see what happens with that officially later on today. Around the world, we had Benjamin Netanyahu. His record run as Israeli Prime Minister ended this weekend, so he's going to be replaced by Yair Lapid. Sorry if the pronunciation is wrong. So we wait and see what happens with regards to that. We obviously had the G7 meeting, which now came to an end. They took a very strong stance towards China's economic issues as well as its Human Rights Act practices. So we'll see what comes of that. Bitcoin in the press again today after Elon Musk said Tesla would resume transactions with the cryptocurrency when mining is carried out with more clean energy. God knows how he's going to police that. I don't know. But that saw a bit of a boost on that as well. So we'll come on to the chart shortly on that front. I think that's pretty much it in terms of headlines. The other thing was crude oil hit a 32-month high as the rollout of the coronavirus vaccine underpins an improved demand outlook, and there is continued discussions over Iran's potential nuclear possibilities, which is impacting price as well. So, Steve, let's get stuck into some charts. Anything that's catching your eye this morning that you want to discuss?
Yeah, I mean, I'll go through the commodities first. So, yeah, just looking at oil to start with. Oil has continued the squeeze higher. We believe we're in a fifth wave, and we're moving up in WTI crude oil, trading just around $71.18, a level we haven't seen since the week of 15th of October 2018. So sort of pretty decent levels there. That's not helping at the pumps when I'm sort of going to fill my car up. Pretty disappointing. It would have been nice if they'd actually, when the prices did come off to $10, it reflected in the petrol price, but it didn't, funny enough. So yeah, that's levels to watch, really. Short-term levels to watch. We're looking really for a support will come in around about 70.86. That would be a decent buy level. There's nothing really sort of no real signs of this slowing down, this move. We've got obviously the 76.80 on the upside we've talked about for a while. That feels like that could be the real target. This 76.80 up here. And in the meantime, we have intermediate resistance between 72.85 and 73.64. So a little bit of a fair way off. Otherwise, it's just general sort of like to and fro trading in the WTI. On the gold front, big reversal in gold. We saw the start of it on Friday. Then we saw a bearish engulfing candle. It didn't quite become a bearish outside day because we had a spike the day before, spike low the day before, which recovered. But that formed a hanging man candle, so it was a little bit of a warning sign. And then we saw the sort of like real capitulation in afternoon price action. This is followed through this morning as well. I mean, that was quite decent, as my God, the head trade idea was to sell, so I'm happy with that. Fortunately, I am still long of it, so haven't my stop on my current gold trade idea is a break of 1850. So yeah, 1852 we've got support, 1856 we've got support, and I think around about here, maybe 1843 for me is the real level on the downside. That a break of 1843, I think we could get an even deeper correction, a sort of like more meaningful correction. At the moment, it's just a gentle correction, although it feels a lot worse, obviously, if you manage to get long on Thursday night. Moving on to the indices, looking pretty smart and pretty good in FTSE. We're trading now at levels not seen since 25th of February 2020, so 15 months, 16 months ago. Although the spike higher this morning has taken out the previous swing high of the 10th of May. We managed to get up to 71.92, so stalled just in front of 7200, a little bit of a psychological level, nothing major, and reversed quite sharply. Now, starting to think, right, is this, I mean, if you look on the hourly chart, you'd be a little bit, a bit scared here after a bearish outside candle and a little sort of spike higher. This is like what normally happens. We normally get this influx on at 8 o'clock open anyway, where you get sort of like major orders playing out. That led to a bit of a spike, so feels like there's a bit of underlying paper getting long ready for this week. So temporarily we've moved lower, but I think it's still a case of buying dips in the indices. There's no sign of it yet, no sign really of that the real sort of like tapering that we expect at some point. Same sort of move on the DAX, spike higher, and we've sort of like, it's led to, that got up to 15,805. So again, held around a bit of a psychological level, and again, nothing much. But looking really, again, to buy dips on this, I think the real support comes in maybe 120 points lower, around about 15,620, around about there. I think we did manage to initiate a short position on the intraday intraday trade idea. So some of our analysts are thinking that this is an opportunity to sell. If they did manage to get short, I think the stop above 15,800 and 5, the current high would be a nice play. Dow Jones, we're still remain in a bit of a corrective channel. Let me get the 4-hour chart up. We can see that the all-time highs all the way back here, still a chunk away from there, and we're getting these spikes getting sold into. So it does feel like this, I mean, looks like a bit of a triangle formation. A bullish triangle it will be, because we have this, this is a long-term rally we're in. But yeah, on the downside, we're looking at really support coming in at 34,330, not very far away, but it'll be dip buying until that breaks. And if we get a clear break of 34,200, then I believe that'll be a more sustained move lower. It'll confirm a break of the upward trending support line that's been in place for a fair while now, going back a long time. This obviously looks pretty good, but we are testing it. Maybe ready to roll over, maybe not. NASDAQ, so the tech sector, we saw this potential topping formation get smashed. That was the 4th of June. Since then, we've seen this sustained rally, and again, nothing slowing that down. The all-time high is coming in at 14,075, so just above where we're trading now. Potential for a retest today, maybe. We'll see if this sell-off, European sell-off in the morning, does reverse and gain ground, and we get a bit of a steady move into these higher levels. The S&P all-time high. Oh, let me see. Saying all-time highs. Am I mad? Am I going mad? Let me see. No, all-time highs coming in at 4,257. No real holding this boy back. But again, I don't really like the shape of these candles. They're sort of, we're seeing the push higher. It feels like a bit of a forced move. They are hanging man candles. They're all over the place. So I do think really this rally higher needs to have a severe breakaway and a little bit of consolidation above this 4,250 level for me to be convinced by further move higher. But this trend line, upward trending support line, since the pandemic lows of the 23rd of March 2020 week, has hit some decent points. We've hit 4 points, so a break of there would open up a move to 4,035, and a break of that would be a real concern. I did read a bit this morning that saying that there would be, based on the inflation issues and everything, I think tapering concerns, we wouldn't really see an issue unless we saw a 10% drop in the S&P. Couldn't really work out why, but that's what some of the big boys are saying. Aussie 200 on a weekly chart, again smashing the highs out, 7,373 on the upside, trading there now. 7,400 would be small psychological resistance level, but the China 50 again not really reacting as well. So again, this is, as I said before, I believe we're in a bit of a corrective wave move lower. ABC looks to target some serious lows, and we're seeing that shape coming now, where we had this channel formation consolidation attempt to spike higher, and that's been worn down. Really, if we get a break of 17,227 in the China 50 and a close below there, then that sets up a target move towards the 16,500 level. Break of there, and we're in serious trouble, and I think that will lead the rest of the indices globally lower. Hang Seng, just doji candle formed last week. That's the 31st of May week, yeah. And this week we're off to a little bit of a setback to start with. Nikkei. Sorry, that's the, let me just rephrase that. That was 2 weeks ago, and last week was a negative candle as well. And the Nikkei, again, we've got resistance above coming in now, 29,690, but really sort of struggling to push on from where it is. So Asian indices looking a little bit soft, European a bit spiky, and the US indices, we have to wait and see this afternoon. Cryptocurrencies, Bitcoin, as Joe alluded to, has had a really nice spike. This, I think we're forming the right shoulder. I'm still pretty convinced by this, and my bearish mentality, or my bearish bias, won't waver until we get a break above the 46,000, 47,500, this 50% fib area. 43,000 is a major resistance. In the meantime, 40,000 obviously psychological resistance as well, but a pretty decent looking candle here. And if we look at the 4-hour chart, do we have the potential to form a double or triple bottom? So we'll definitely be on the lookout for this. Here we go. We got the spike lower here. That means that 43,115, a break of there confirms a double bottom there. But also we've got a spike lower here, and I think really that will be a double bottom if we break above 40,900, and potential for the up move is pretty good. Generally we're looking at round about, as a measured move, well, we're looking at back to 53,000 on that. So broken out of the triangle formation, obviously hasn't taken out these decent resistance levels at 41,000, we'll call it, and 43,000. Really needs to break above there for me to be a bit concerned about being short in the Bitcoin. And I think, as well as, you know, Musk sort of like saying, oh, you can buy my car if you're a bit greener Bitcoin. I think is a bit hard to police, and maybe it's just a reaction and it may peter out. But you've got to respect it is on the firm side this morning. On the downside below, really need to get back below 34,800 for another retest of the 30 to 31,000 level. That's that on Bitcoin.
Lovely, great roundup, Steve. Thank you. So let's get stuck into FX. So quite interesting on the dollar index this morning. We've seen a nice push to the upside on Friday. Not really backing that up with any gains today. It's pretty flat, but we did rally into this resistance level here at 90.63. So that was a high that was posted on the 4th of June. That actually led to quite a severe reaction lower, but we're back at that level now and trying to test it. So if we can break out to the upside, then I think there's potential for a continuation higher, and also what we have is a continuation of this small trend of higher highs and higher lows. So whether or not it's just a corrective move higher, it probably is, given the fact that the severity of the downtrend is so strong. But quite interesting nonetheless, and I think if we can break above these resistances at 90.63, then it could open the way for a move up to around about 91.43 in the short term. So quite an interesting point, I think, for dollar index. Let's have a look at what that's done for euro dollar. So on Friday we saw some selling and we tested this support level here from the lows posted on the 4th of June. We managed to close above it, although we've had a little look below, and again another little look below today, but we are continuing to hold above it. We're up by about 0.05% so far today. Very interesting. I think if it breaks down these levels on a closing basis, then we can start targeting lower levels. And in terms of where I'll be targeting after that, I think that would be a first point there at 1.2026. And then potentially these lows down here at 1.1985. So below the support here at 121.03 on a closing basis, then we're looking for a continuation lower towards these levels in the short term. And beyond that, then we could be looking towards what is potentially a neckline of a head and shoulders top, which I've drawn a couple of times on these charts over the past few weeks, just sort of insinuating that this could play out. It's very speculative at this point because it needs to do a lot more to even become a head and shoulders in the first place. It needs to be down here around about 117.85 and break those levels to confirm the pattern. But just speculatively talking about it at this stage, if it were to play out, then we'd be looking to measure the move from the head down to the neckline projected lower, and we could be looking at prices down at 110.55. Obviously a lot to do, but just wary that could be in motion and potentially playing out. If we look at some of the other currencies, again, let's look at cable. That had a bit of selling pressure last week, bit in the red as well this morning, targeting a move down potentially to this support level at 139.89. We've got a gap that was unfilled here from the 10th to the from the 7th to the 10th of May. That also marries up with this uptrend line, which has been in place since 18th of May 2020. So an interesting level to target there in the very short term. Potentially a decent opportunity to buy for a continuation higher. Obviously a lot's going to depend on what happens with the dollar index and whether or not that does continue to march higher. If we look at some of the riskier assets like New Zealand dollar versus the US dollar, obviously with that little bout of dollar strength that we saw on Friday, we saw some selling here. Quite an interesting level, I suppose, or sort of band of support that's formed around here. If we narrow that up, you can see it's just been trading in a range between these two levels at 0.7122 to 0.7305. If we get a closing break below this level, then we'd probably be looking for a move down to 69.43 to retest those lows that were posted back in March. And then if we break those levels, we've formed probably some sort of top pattern. It's not a sort of classic looking head and shoulders or anything like that, but quite a rounded bit of price action that we would have seen there. And if it breaks down below those levels, I think we can safely look to measure the move from this high here to the low and project it lower, and that comes in at around about 64.27. So some interesting levels to watch here on New Zealand dollar, US dollar. If we look at Aussie, that posted a pretty interesting engulfing candle last week in conjunction with that dollar strength. If we take out the lows here, I would say at 76.45. Then we'll be targeting a move down to these support levels between 75.00 and 75.32. So keep an eye on those levels today. Dollar CAD, quite interesting. We saw some really narrow price action over the last few sessions or so. We saw a break above resistance at 121.44. That could trigger a corrective move up to the upper end of this channel. If the channel breaks, then I think we could see quite a decent corrective move to the upside, potentially over the medium term towards the 38.2% fib level at 130.27. As you can see, this has been in a horrible downtrend for quite some time, going back to March, where we saw the lows in the equity markets at the pandemic, when the pandemic really kicked off. So quite interesting there. Again, all going to be dictated by what happens with the US dollar next. Dollar yen, still my favorite play if you're looking to get long of dollars, just because the yen has been so weak. We've seen a bit of an engulfing candle form on that on Friday with the dollar strength that we saw. A little bit of continuation higher today, but the trend in the short term remains pretty strong, although we did see a bit of a warning sign there with the candle on the 4th of June. Initially, I'd be looking for a target of those highs, so around about 110.30 in the short term, and then beyond that up to maybe 110.96. So that pretty much sums up what I'm looking for on the FX market. Potentially an interesting week ahead if we do start to see some continuation higher, particularly from the dollar index, and the knock-on effect that will then have across other markets. Okay, so gun to the head trades from Friday, quite exciting for a change. We've seen some big moves, and although I hit target on Aussie yen for a 2.9R win, it was Steve who stole the show on Friday with his humdinger of an effort on gold, landing an 8.38R win on gold. So very well done, Steve. Obviously, we've been trying a few of these sort of big R outcomes over a number of months. But if you just be persistent and stay strict with your risk management, you will land one of these eventually, and it has a massive impact on your overall P&L.
Yeah, I mean, I wouldn't encourage this sort of style of trading as a sort of as a general rule, but it's nice to have these opportunities, and once in a while they do pay off. Yeah, I mean, obviously a really good day for us on Friday overall, both nailing a win. So yeah.
11.3R collectively, and let's have a look at the overall P&L sheet on the chart. So you can see quite a big spike to the upside on the back of those two wins. And yes, we're well below the highs that we've seen previously, but this could be a nice way of kickstarting some continuation higher. And as we've said before, in order to succeed in this style of trading, which is we make a call, with a gun to our head effectively every morning, and where we think there is opportunities to make money, you do need volatility in the markets for these ideas to have any form of success. And I think on Friday, with that move in the dollar index, we have seen a bit of an increase in volatility. So if the volatility is to persist, then maybe we can go on a bit of a run here, Steve.
Yeah, it would be nice, wouldn't it? Mind you, I was looking through the FX just now while you were chatting. I was thinking, where I can't see where to really go in there. I mean, the one thing I did look at, I looked at a couple. Have you got one ready, Joe? If you want
Well, I was looking at dollar index. I mean, I've just been talking about how this could break up, but it is at a pretty massive level. And if it can't break up, then we're going to see a move to the downside in line with the dominant trend. So this is the hourly chart I've got on the dollar index. You can see this big move up that happened last week. Probably looks a little bit stretched. And as we pointed out, it rallied to this resistance at 90.63-ish. So just looking at what's happened over the last hour or so, we formed this candle here, we broke below a bit of support, and we just rallied straight back. But I'm wondering whether or not this is maybe a potential opportunity to get short, just because the overall trend is still weak. But if it does break up above these levels, then potentially we are going to see a correction higher in the dollar index, and you wouldn't want to be in it. But so from a risk reward perspective, in terms of entry, this is, I guess, the ideal entry point if you are going to fade it, just in front of the big resistance level that it needs to break. So I'm going to go with that. I'm going to sell dollar index at 90.54. I'm going to put a stop loss at 90.67, so quite tight, just above these levels here. And I'm going to target a move down to the most recent swing lows at 89.88. So looking for 5.2R on dollar index today.
Nice one.
What are you looking at?
Well, I'll come back on to what I'm going to do, but one of the ones I was looking at was the Aussie New Zealand dollar. Now, the interesting thing for me on this, obviously on the weekly chart, we've had a couple of decent weeks with Aussie strength, New Zealand dollar weakness, and we're up to sort of quite significant levels. We can sort of see really this level here. Get it read. This level here, where prices have spiked above and sort of like come and close lower. We've actually got to close above it. So, you know, you can sort of like look at it two ways. Really, you could go flip a coin on here, but we have closed above this. Well, it's basically the highest close really since way back here, since the 19th of April. So that's pretty good, and that's the previous highest close, and we've closed well above it. So potential for that to really kick on the Aussie dollar front, that Aussie New Zealand dollar, that's the one I was looking at. But I think I'm going to stick with indices, stick with what to know a little bit better. Looking at the Nikkei 225, and we've got a trend line, and this was from the peak of the 18th of March. The 16th of Feb one is a little bit higher. We'll show you that. That comes in a bit higher, but we've got 1, 2, 3, 4, 5, and this is a 6th time of asking. And so I think from a risk reward perspective, this looks like a good opportunity to fade this move. Again, with a little bit of an indice head on, I'm sort of thinking a little bit, I am a bit of a bear, people know that. But also looking at the 4-hour chart, I was thinking about this head and shoulders formation, which is clinging on to with its claws at the moment, but still a bit of a potential stalling formation. And looking at the hourly chart, this hourly chart is looking to sort of close as a bearish engulfing after a shooting star. So it could be a little bit of a shooting star formation. And again, we can see this potentially lines up with the then potential for a double top, especially if we can break down below 29,023. So I'm going to get short here, and I'm going to have quite a tight stop. I'll leave the stop where it is. Really, no, I won't leave the stop where it is because the risk reward for me is not so good. So if I bring the stop in to 29,000. 198, and let's like target a break of this level here. So that gives me a 4-to-1 risk reward. Quite a tight stop, as we've just said. Getting short 29,158, stop at 29,198, and the targeting that move to just below 29,000, 28,998. So that's 4-to-1 risk reward, which is quite nice.
Indeed. Okay, good luck. Right, so news-wise today, what have we got? Nothing really of any high impact on the calendar from what I can see. We've got the UK in focus because we've got jobs report, CPI and retail sales all being released in the coming days. Later in the week, we've got the latest FOMC meeting, and that's sure to provide another significant event for traders to focus upon, particularly discussions around inflation. Today, bit of a slow start to the week, only a few major releases, the Eurozone industrial production and an appearance from the Bank of England Governor Andrew Bailey are the only events of note. So yeah, that pretty much wraps it up from us, Steve.
Nice one. Okay, well, have a good day today, everyone. Hope it all goes well.
Yes.
And I hope you've enjoyed the market highlights.
Yes, indeed. Thanks, Steve. We'll be back tomorrow morning.
Okay,
Cheers, guys. Bye.